Hello students, this is Mrs. Sharma and I am here to teach you Goodwill of a partnership firm, Accounts, chapter number 8. First let me tell you, what do you mean by the term Goodwill? What is Goodwill? Then we will see how you calculate Goodwill in the form of numericals. When you see there are two firms working in a market selling the same products. There are two firms in the market who are selling the same products, and there are two firms, suppose we say A and B, and they are selling the same products in the market, and we see that firm A is doing better than firm B, right? Firm A profits are rising, sales are rising, and firms B profits are decreasing, sales are decreasing. That means firm A is doing better than firm B. Why? Or people are getting, or customers are getting, government or the dealers are getting better attracted to A than B. Why? Because of the goodwill of the firm. Goodwill, or I can say because of the reputation of the firm. You see there is a term reputation. Because of the reputation or a good reputation of a firm, the firm enjoys certain benefits, or firm enjoys extra profits than this firm. See, suppose this firm is earning 10,000, this firm is earning 5,000. So how much extra this firm is earning? 5,000, right? So this 5,000 is what is the extra profit. This extra profit is because of goodwill, or the good reputation or a better reputation that A enjoys than B. So that is known as a goodwill. A good reputation one firm enjoys over the other firm is the goodwill. Now, why you need to calculate goodwill? You need to calculate goodwill when you are selling the firm. You need to calculate goodwill when there is a change in the profit ratio of the firm. You are selling the firm, you need to calculate goodwill. You are change in the profit ratio, change in the profit sharing ratio. You need to calculate goodwill. So when you are selling the firm, buying the firm, you need to calculate goodwill. When there is a change in the profit sharing ratio, you need to admission of a new partner. If there is admission of a partner, you are required to calculate goodwill. Then retirement or death of a partner, you need to calculate goodwill. You are selling the firm, you need to calculate goodwill. There is a profit sharing ratio change, you need to calculate goodwill. There is an admission of a new partner, you need to calculate goodwill. And there is a retirement or death of an existing partner, you need to calculate goodwill. So now we know why we are calculating goodwill. We see next thing, very important, is methods. What are the different methods that are required to calculate goodwill? See, there are number of methods by which you can calculate goodwill. But in your class 12th or standard 12th or junior college, whatever you say, that is SYG, you need to calculate goodwill, or your book has given only two methods to calculate goodwill. One is the average profit method. See, there are two ways of calculating goodwill under your studies. There are many ways to calculate goodwill, but your textbook deals only with two ways of calculating goodwill: average profit method and super profit method. Average profit method and super profit method. These are two methods of calculating goodwill. In this average profit method, I will explain you, and I'll also explain the super profit method, and we will do the numericals under the two methods. In this class, we will deal with average profit method today. Let's start up with average profit method. profit method is the first method that is basically meant to calculate goodwill. I'm telling you time and again, we have two methods of calculating goodwill. One is average profit method and the other is the super profit method. We are dealing with the average profit method first of all today. Average profit method means average is one number that is representing many numbers, or in the formula term you can say there are many numbers you add and you divide by the number of items. That is known as average profit, right? And you have again the profit that is given to you, you find the average of all the profits, the total profits, right? So this average profit method is required, just note down the formula. There are certain steps when you calculate the average profit. First step is you have the total profits given to you. See, you have the profits given to you for different years. You have profits, suppose for 1, 2, 2003, 2004. So you have total profits. For one, this is profit. This is suppose loss for 1 year. Profit. So you add up all the profits and you subtract the loss. So this is how you calculate total profits, right? Then you have step 2. Step 2, after calculating total profits, you are to calculate average profit. How you calculate average profits? Total profits, or total profit rather, divided by number of years, right? Total profit means this plus this minus this, whatever total comes, divided by number of years. How many years are there? 1, 2, 3, 4. So that will give you average profits. Next is step 3. Step 3, finally you are calculating goodwill. Step 3, you will calculate goodwill. Now you have got average profits. ABG I am writing as average. Average profits you have, right, into the number of years purchase. Number of years purchase. Number of years of purchase, they say basically. See, what is this number of years purchase? This number of years means one first year. How many years are there? Profits are given for 1, 2, 3, 4, 5, 6. How many years? That is number of years. There is another thing which they write it as number of years of purchase. That will be some other term that will be given to you. We will see in the question. First question, we will deal in the first question and we will see how we will implement these 3 steps, or how we follow these 3 steps in solving our problems. Let's get down to the first numerical. Our first numerical says if they have total profits. Question number 1 we are doing average profit method, goodwill of a partnership firm, chapter number 8. They have given profits for the 5 years, right? They have given profits for the 5 years. So what you have to find out, first step, you have to find out total profit. Total profit you will find out by adding the profit of all the 5 individual years. What they have given as 28,000, right? Then 12,000 for the second year, then 4,000 for the third year, right? Then 20,000 plus how much? 24,000 for the last one. This they have given the profit. How many years? 1, 2, 3, 4, 5 years. 5 years profit they have given. You have to find out the total profit. How much this will be? Rupees 88,000. This is the total profit that you get, right? Now what is the next step? You have to find out the average profit. How you find out the average profit? Total profit divided by the number of years. Okay, so this will be total profit divided by number of years. What is the total profit that you got? 88,000, right? What is the another thing? That is number of years. How many years this profit is for? 5 years. So 88,000 divided by 5, that will be 17,600. So rupees 17,600 is your average profit. You have got total profit, you have got average profit. Next thing that finally you will be calculating would be goodwill. Goodwill, the formula is average profit into or multiplied by number of years of purchase. Number of years of purchase, right? Now what is the average profit that you have found out? 17,600 into, see the question they have given, they say it is for 2 years of purchase, right? It's there in the question. That is number of years of purchase. This is number of years for which the profits are given. This is number of years of purchase, which is very exclusively or identically mentioned in the question. It's not difficult to find out where in the question it is. So it is given 2. So 17,600 is the average profit. Number of year of purchase is 2. 17,600 into 2 will be 35,200. Rupees 35,200 is the amount of goodwill of the company. So they have the total profits. Then you come to the average profit. Total profit is the profits or the 5 years that is given to you, 28,000 plus 12,000 plus 4,000 plus 20,000 plus 24,000. You get 88,000, right? Then they have asked you to find out the goodwill basically. So after calculating total profit, next step that we do is average profit finding out. So average profit is total profit, what you have found out, divided by the number of years. So total profit is 88,000 divided by number of years is 5. So average profit you will end up as to rupees 17,600. Finally, you are calculating the goodwill. Goodwill is average profit into number of years of purchase. So average profit is 17,600 into number of purchase given in the question is 2. So goodwill, we arrived the figure of rupees 35,200. This is the first problem of average profit method given in the textbook. We switch on to the next numerical, that is numerical number 2. What this question says, you have to again find out the total profit of the firm, but they have given profit for the first year. See, you will be finding out total profit of the firm. They have given profit for the first year, they have given profit for 5 years, right? But second year they have given loss. Right? So first year they have given a profit of 40,000. You write it as 40,000, right? Next year they have given, that is the second year, there is a loss that the company has incurred. So you will write it as minus 20,000, right? Because that is a loss, right? Then it is profit again of 30,000 that the company has earned. Then they have earned a profit of 50,000 in the fourth year, and finally in the fifth year they have the profit of 40,000 for the 5 years, right? So we will see how they have 40,000 minus 20 is 20,000, 20 and 30 is 50, 50 and 50 is 1 lakh, 1 lakh and 40 is 1,40,000. 1,40,000 is the total profit that the company has earned. Next step will be you have to find out the average profit of the firm. Average profit is total profit divided by number of years, right? Total profit divided by number of years. What is the total profit? 1,40,000. 1,40,000 is the total profit. Number of years means for how many years they have earned this 1,40,000 for? 5 years. So 1,40,000 divided by 5, it will be rupees 28,000. This is the average profit you have got. Total profit divided by the number of years. Number of years, please remember, it is 1, 2, 3, 4, 5. This addition is of how many years? That number of years will come here. Next step is finally the goodwill. Goodwill is, again I'm telling you, it is average profit into the number of years purchase. Average profit into number of years of purchase. This will be a separate figure. Number of years of purchase will totally be a separate number. Don't confuse between number of years and number of years of purchase. This is given in your question as 2.5 years. 2.5, you can write it as 5/2 also for calculating it easily. So what is the average profit that you have got? 28,000, right? What is the number of years of purchase? 5/2. So it will be 2 to 14,000. 14,000 into 5, that will be 70,000. So rupees 70,000 is the goodwill of that particular company. Please make sure that don't get confused between number of years and number of years of purchase. This number of years will always be the addition, that is, this figure will be the number of years that you have added up. 1, 2, 3, 4, 5. So this will be that number of years. When you calculate the goodwill, number of years of purchase will be given differently in your question. Right, so in your question it is given 2.5 years of purchase. This purchase word will always be there. So you will use it when you calculate goodwill. So this was a different question because here you had all the profits. This was a profit, right? This was a profit. This again was a profit. This was a profit. This was the only loss figure that was given to you. All the other years the company earned profit. First, third, fourth and fifth year the company earned profit, and second year the company incurred a loss. So you will add up all the profits and subtract the loss. That will be the total profit of the company. So you will find out average profit, then the goodwill. This was the second numerical of your textbook. The third numerical and the fourth are the same. We will Let's see how we do with the super profit method. We'll solve the numericals, but before solving them, we will just see how it goes stepwise. Step 1 is finding out the total profits. The total profits are find out in the similar way as we used to find in the average profit. Profits for 5-6 years are given to you and you add them up and you get the total profits, right? Step number 2, you are finding out the average profits. How you find the average profit? Total profit divided by the number of years. So there you get the average profit. Till now the steps are same. Next step will be, there is a change. You will be finding out normal profits also. In the last class, that is when we were doing the average profit method, this was not to be found there. But when you do the super profit method, new thing is added, that is normal profits, finding of the normal profits. How you find the normal profit? Just see. Normal profit is capital employed. See, capital employed will be given to you in the question. And you have to just see capital employed into the percentage. Rate of return, this is known as. This will be given to you in the question. So you will be finding out normal profits by capital employed into the rate of return. So this is the third step in finding out the goodwill by super profit method. Then fourth step will be finding out the super profits. Yeah, super profit, the formula is average profit, right, minus normal profit. Average profit, that is step 2, minus normal profit, that is step 3. So this is super profit. Then last step is finding out the goodwill. Goodwill will be super profit into number of years of purchase, as we did in the last class when we were finding average profit method goodwill. Number of years of purchase. Okay, this is how you find the super profit. First is you are finding out the total profit, as we did in the last method. Second step is finding out the average profits. Third step is finding out the normal profit. See, this is a new thing. Please learn how to find out the normal profit. Capital employed, which is given in the question, into the rate of return. Rate of return will also be given in the question, and it will be given in which form? Percentage form. Then you will find the super profits, that will be average minus the normal profits. Finally, you will be finding out the goodwill, that will be super profit into the number of years of purchase. Let's move on to the first numerical question, number 1 of chapter number 8. We will do the first numerical. See what the first numerical says. They have given the profits for the 3 years. So first we will find out the total profits. Right? In this question, they have not given any loss. They have given profits for the 3 years. Right? It is 99,000. Right, so I'll put a plus sign because it's a profit again. 75,000 plus 94,000. They have given profits only, so there is no loss, no minus sign. Right, it is 2 lakh rupees. Right, this is the total profit I'm finding out. 2,68,500. 2,68,500 is the total profit of the firm. Next step that we will do is finding out the average profit. How you will find out the average profit? The total profit divided by number of years. What is the total profit? Total profit is 2,68,500 divided by how many years? 1, 2 and 3. So you divided 2,68,500 divided by 3 will give you rupees 89,500. This is, you get the average profit of rupees 89,500. Next you will be finding out normal profits. This is a new thing that is added to this method, normal profits. What is the formula for normal profits? Capital employed into the normal rate of return. What is the capital that is given in the question? First write the formula. Capital employed into normal rate of return. Right? What is the capital employed given in the question? Capital employed given in the question is rupees 5 lakh. So we write capital employed 5 lakh. What is the normal rate of return they have given in the question? 12%. Right? So 5 lakh into 12% will give you 60,000. This will give you 60,000. So you have got the normal profits also. Now finally what you have to find out? You have to find out super profits. That will help you to find out the goodwill. Right? Right? So what is super profit formula? Super profit is average profit, right, minus the normal profit. So average profit minus the normal profit is the formula for super profit. What is average profit we found out? 89,500 minus what is the normal profit we found out? 60,000. 89,500 minus 60,000 will give you 29,500. This is the super profit that the company has earned. Now you will find out the goodwill. What is the formula for goodwill? Goodwill is super profit into number of years of purchase. Number of years of purchase. That is the formula for goodwill. What is super profit? How much super profit you have earned? 29,500. What is the number of years of purchase given to you? Number of years of purchase given to you is 3. That's given in the question. 29,500 into 3 will give you 88,500. This is the amount of goodwill the company has earned. You have to find out goodwill by super profit method. You have found out the total profits, then the average profit. After finding out the average profit, this is a new thing. Please do this very clearly. This is something that you have not done earlier. You will be finding out the normal profits by capital employed into the normal rate of return, right? Then finally you will arrive at super profits by subtracting normal profit from the average profit. Then goodwill will be super profit into the number of years of purchase. This is the first question. We will switch on to the other question, please. We will do the fourth numerical now. See, in this question what they have given is, they have given average profit before deducting partners' remuneration. Whenever you are finding out average profit, you will be always deducting the remuneration given to the partners. Then only you will work on that profit in further process, right? So first, what the profit is given to you, see, you don't have to find out. Earlier in problems we used to do finding out the total profit, then getting to the average profit. But in this question they have already given the average profit, but they say that is before deducting partners' remuneration. So you will be finding out that's net average profit. Now how you will find out? You will find out average profit. Now see, this average profit is before deducting the partner's remuneration. So you have to first deduct the partner's remuneration, then only you will use this profit. So average profit minus partner's remuneration, right? Partner's remuneration. So what is the average profit now you have got? Average profit, net average profit, that will be, it is 1,08,000. This is the average profit. And what is the partner's remuneration? 24,000. Right? So 1,08,000 minus 24,000, this will be rupees 84,000. This is the net average profit that is given to you. Next step that we do is finding out the normal profits, right? So capital employed is given and you have in the other form, and you have to get down as to how you will use that capital employed. Now they have given the capital of the two partners, Ram and Raghu. Now what you will do, capital employed means the total capital of the firm, right? The total capital firm means you have two partners, Ram and Raghu. The total of the capital of those two partners, that is Ram's capital, right, plus Raghu's capital. That will be the total capital of the firm. So what is Ram's capital and what is Raghu's capital? 3,60,000 plus 2,40,000. Right? 3,60,000 plus 2,40,000. So the total capital will be how much? 6 lakh. See, this is a new thing that has come in the question. Till now you were given capital employed, but now you have to find out capital employed. So capital employed is total capital. Total capital is made up of the capital of the partner, that is Ram and Raghu. So add their capital and you will get the total capital of the firm. Next is finding out the normal profits. How you find out the normal profits? You will find out the normal profits by capital employed, that is 6 lakh, right, into the normal rate of return. They have given it as 10%. So what will be the capital normal profits? 60,000. This will be your normal profit. Now next thing that you will do is finding out the super profits. How you find out the super profit? Average profit minus the normal profit. This is how you find out the super profit. So what is the average profit that the company has earned? 84,000. Okay, 84,000 minus what is the normal profit that we have just calculated? 60,000. 60,000. 84,000 minus 60,000 will give you how much? 24,000. This is the super profits the company has earned. Now the last step will be what? It will be calculation of goodwill. Now you have to finally find out the goodwill. Goodwill, how you find out? Super profit into the number of years of purchase. So super profit is 24,000 into number of purchase in the question is given as 3.5 years. 3.5 years. So how you can write it as 24,000 into 3.5 years? 3 2s are 6. 6 plus 1 7. You can write as 7/2. Right? So 2 1s are 2 12s are, and 12 into 7 you can do it. That will be 84,000. So this will be the goodwill, 84,000. How you did it? It is net average profit you have to find out. But before that they have given the question the average profit is including the partner's remuneration. So please deduct the partner's remuneration and you get out the net average profit. Second step, again there is a complication. They have given the capital of the two partners. So how you will get the total capital? By adding the partner's capital. See, this is Ram's capital and this is partner B, that is Raghu's capital. You add the two capitals, you will get the total capital employed. Then you find out the normal profits, super profits, and finally the goodwill. This is the fourth question. We will move on to question number 5. We move on to the fifth numerical. Now see, in this question there is a little different thing. They have given the balance sheet also that will help you to find out the capital employed. Now we will first deal with the total profits. Total profits, in this case they have given the losses also. So you please subtract all the losses and add up all the profits. First year they have given a total profits. First year there is a profit, so write it plus 56,000, right? Next year they have given a loss, so minus 4,000. Third year there is again a profit of 90,000, right? Fourth year there is a loss of 10,000, so subtract it. Next year, that is the last year, they have given a profit of 1,10,000, so added. Profit, loss, profit, loss, profit. Right? So this is how you will get the total profits. 56,000 plus 90,000 plus 1,10,000 minus 4,000 minus 10,000. You will get 2,42,000 rupees. 2,42,000 42,000. This is how you will get the total profits. Next step is finding out the average profit. How you find out the average profit? Total profit divided by number of years. Total profits divided by number of years. Right? What was the total profit? 2,42,000. Number of years? 1, 2, 3, 4, 5. 2,42,000 divided by 5 will give you 48,400. 48,400 is the average profit. Right? Next step is finding out the normal profit. In the question that is given to you in your textbooks, they have given the balance sheet. Now, how you find out the capital? There are two partners, Dinesh and Rakesh, given to you in the question. You will find out normal profit, that is capital employed into the rate of return. I will write it. Capital employed into normal rate of return. Right? Capital employed, they have not given in the question directly, you have to find out. So capital means total capital of the firm. How you will find out the total capital? By adding that capital of the two partners. The two partners capital is, that is Dinesh's capital is rupees 6 lakh, Rakesh's capital is rupees 2 lakh. So total capital will be 8 lakhs. How you got this 8 lakhs? That is, capital means total capital. Total capital means that is adding the capital of the two partners, Dinesh and Rakesh. Dinesh's capital is 6 lakh, Rakesh's capital is 2 lakh. You add them up and you get 8 lakhs. And you have 6% as the normal rate of return. 6% means 6 by 100. So you will get 48,000 as the normal profit. 48,000 as the normal profit. So you've got the average profit also, you've got the normal profit also. Let's find out the super profits. The formula is average profit minus the normal profit. Average profit minus the normal profit will give you super profit. What is average profit? 48,400 is the average profit. Normal profit is what? 48,000. Right? This minus this. That is the average profit minus the normal profit. How much you get? 400. 48,400 minus 48,000 will give you 400. So super profit is 400. Last step is finally calculating the goodwill. Goodwill means super profit into number of years of purchase. The number of years of purchase in the question is given 5. They have written is as goodwill is valued at 5 years of purchase. Goodwill is valued at 5 years of purchase. They have given this line in the question. So it is super profit 400 into number of years of purchase, that is 5 given to you in the question. So 405 into 5 will give you how much? 2,000. So 2,000 is the goodwill of the firm. See, again there is a different thing in the question. Firstly, they have given the losses also. So subtract all the losses from the profit. You get up the total profit of rupees 2,42,000. And second thing that different they have given in the question is in terms of capital employed. In the other questions they have not given that type of a thing. In this question they have given the balance sheet. So from that balance sheet you see the capital of the two partners of the firm. The two partners are Dinesh and Rakesh, and you have to add up the capital of those two partners, which will sum up to be rupees 8 lakhs. So that hence you will find out the capital employed into the normal rate of return. You will find out the normal profits. Rest of the procedure is same. Finally you will land up with 2,000 as the goodwill of the firm. This was question number 5th. We will move on to the next question, that is question number 6. We'll do the 6th numerical now. we have to find out. They have given profits and losses for the 5 years. For first year, they have given a profit of 75,000. Second year, they have given a profit of 90,000, so we have added. Third year also, they have given a profit of 36,000. Fourth year, they have given a loss of 6,000, so you better subtract it. Last year also, they have given a profit of 30,000. Right? So this is the profit of the 5 years that's given to you. You'll find out the total profit, which comes out to be 2,25,000. This is the total profit earned by the firm. Next step is finding out the average profit for the firm. Total profits divided by number of years. What is the total profit? 2,25,000 divided by how many years? 1, 2, 3, 4, 5. Divided by 5. 2,25,000 divided by 5 will give you 45,000. Rupees 45,000. This is the average profit of the company. Next step will be finding out the capital employed. So there are two partners given to you. We have to find out the capital employed. You add up the total capital or the capital of the two partners, that is 1,80,000 and 1,20,000. 1,80,000, that is the capital of the first partner. 1,20,000 capital of the second partner. This you will add up. This is the capital of the two partners, right? So you add up this, and second thing which you will add, which was not given in the last question but given in this question, that is why I am solving the question. Second thing will be profit and loss balance credit that's given to you, and that is 30,000. This is P&L account credit. Credit means what? Credit means it is given on the liability side. Please make sure, last question we didn't add the P&L account because it was not given in the question. In this question, they have given the partner's capital account to be 1,80,000 and 1,20,000. In this, you will also be adding 30,000. 1,80,000 plus 1,20,000 plus 30,000. Total will be how much? 3,33,000. 3,30,000 will be the total. Again I am telling you, 1,80,000 plus 1,20,000 plus 30,000 will give you rupees 3,30,000. This is the capital employed that you have got. Next step will be what? You are finding out the normal profit. How you find out the normal profit? Capital employed into the rate of, that is the percentage given to you, that is normal rate of return. In this question, what is the capital employed? 3,30,000 that you have just calculated, and they have already given 10% as the normal rate of return. 3,30,000 into 10% will give you how much? 33,000, right? 33,000 is what? The normal profit. So you have got the normal profit also, you got the average profit also. Now you find out the super profit. Average minus normal. So what is the average profit you calculated? 45,000 minus what is the normal profit you calculated? 33,000. Right? 45,000 minus 33,000, that will be 12,000. 12,000 is what? 12,000 is the super profits that you have calculated. Last step finally is calculation of the goodwill. By the super profit method, that will be super profit into number of years of purchase. Number of years of purchase. Right? This will be given to you in the question. What is the number of years of purchase in the question given to you? 5. What is the super profit? 12,000. So 12,000 into 5 will be how much? 60,000. This is the goodwill that we have calculated by super profit method. Total profit average. Capital employed was little tricky in the question because last question this was not given. In this question this is a new thing that's given to you. So you please add a P&L account credit to the capital account. So you will get 3,30,000. Rest the procedure is same. I need not repeat it. Finally you are finding out the goodwill by super profit into number of years of purchase, which will give you figure of 60,000. So goodwill is rupees 60,000 by super profit method. Question number 6. We will move on to the last question given in the textbook of this chapter, that is question number 7. Seventh problem, that is the last problem of super profit method, chapter number 8, goodwill. See what this problem says. It is similar to the other problems, but when we solve it there is a little confusion which arises. There are 4 years profit given to you. Total profit is found out first. There is absolutely no loss. Profit for the first year 65,000. Profit for the second year is 70,000. Again there is a profit, that is 72,000. And for the fourth year also there is a profit of 78,000. Right? So you have been given profits for the 4 years. There is no loss. So you can see I have put up all the plus signs. Now when you add it up you will get 2,85,000. This is what you get up as the total profit of the firm, 2,85,000. Next step that you will do is finding out the average profit. Average profit is total profit divided by number of years. What is the total profit? 2,85,000 divided by 1, 2, 3, 4. 4. So what you get, 2,85,000 divided by 4 is 71,200. This is the average profit. Next step, total average. Next is you will find out the normal profits. For that, you require normal profit. Normal profit, please write the formula. Capital employed into normal rate of return. This is the formula for normal profits. What is the capital employed they have given in the question? They have given it directly. You don't have to find out. Very clearly they have written in the question that the capital employed is rupees 8 lakh. So you have written 8 lakh. What is normal rate of return? 12%. This is also given in the question, 12%. So 8 lakh into 12% will give you how much? Rupees 96,000. Right? So this is the normal profit that you have got. Average profit also you have calculated the normal profits also. Let's calculate the super profit. Super profit, what is the formula? Average minus normal, right? What is the average profit? Average profit is 71,200. What is the normal profit? 96,000. Now you see a difference. 71,200 minus 96,000. That means your answer will be coming in negative. That is minus 24,750. So super profit, instead of profit you are incurring a loss. You are getting your answer in negative. So what you will do here is you abandon the question. Right there is no super profit. After writing this, write no super profits, hence no goodwill. This is one and the only problem when you are calculating no goodwill. That is, goodwill is nil. Right? No goodwill, or you write nil, goodwill is nil. So you have
the super profits, that is average minus the normal. Average is 71,000, which is less than the normal profit. So you're getting your answer in what? Minus 24,750. So if you're getting in minus, then that's not a profit, that is a loss that you have incurred. So there is no super profit. Please write that. Don't leave the question. This is half done question. You will not get marks. Right there, no super profits, hence no goodwill. This is how you will end up the problem. This was the 7th problem of chapter 8, goodwill, calculated by super profit method. We have done nearly all the problems, just left 1 or 2 problems, 1 problem I guess, and that was similar, that is expected to be done by you. We have done all the difficult and the easy problems. If there is any difficulty, then please refer the problems which are the same as they have left out.